all, and welcome back to another episode of the ICIS Energy Foresight podcast. Today, we're going to talk about the outlook for the second half of 2024. And with me, I have Marzec Manser and Matthew Jones that will guide me through the balance between bearish fundamentals, we can say, and a bullish geopolitical outlook with a lot of things happening in the world. Hi, guys.
Hey, Matteo.
Hello. So let's start from, the current situation. We've come out of winter with a relatively stable market, so no major surprise, no major shock. And we've seen that reflecting into the price of gas and power. Carbon took a different direction for other reasons, probably. But yet, the market is quite reactive, especially the gas market. Any new piece of information coming from different angles of the world is never, an easy one to digest. And we see that the price tends to bump up from time to time. But what is happening? So, Tom, can we start from gas? Because the fundamentals, they look pretty balanced. So plenty of storage, sluggish demand. The supply seems quite healthy at the moment. What is going on, and what is the outlook for the second half of the year?
Yeah, thanks, Matteo. So I think it is a really interesting story on gas. The first four months or so of the year, gas consumption on a net basis in Europe has been down year on year. If you weather adjust that to compare it with the same periods in 2023, then gas demand is probably up a bit. So we had Q1 was even warmer in 2024 than it was in 23. So we use less gas just because there's less heating demand. But yeah, if we take into consideration an equal number of heating degree days in 24 as we did in 23, then we are consuming more gas. That is largely driven by the residential commercial sector for heating purposes. But industrial gas consumption is down still. And our view for the remainder of the year, really, assuming that the weather is normal, is that it's kind of more of the same, that we'll see the rescom sector coming back slowly but surely. The prices that the retail consumer is paying is getting ever lower. But industry is still having a rough time, and we expect it to continue to do so. And that's not totally just to do with energy prices. There's an element of what's going on in the downstream sectors of markets such as petrochemicals that means that we kind of have this bearish view in terms of consumption of gas.
Thanks, Tom. I think that's an interesting point. And if we look at the power market, which is obviously complementary to that, and I try here to be a little bit, to simplify the picture. So we got a lot of nuclear. So French nuclear is back to normal. We got a lot of hydropower. So the reservoirs, and it has rained a lot during the first half of the year. And the demand, we looked into that an episode of our podcast a few months ago. Demand is still sluggish, especially on the industrial side. So is it normal that we will keep seeing a lot of negative prices going forward and prices actually coming down even further in the second half of the year?
Yeah, I mean, you're right about the nuclear, where the first 4 months of the year, French nuclear output was only 2% below where it was in 2021, which shows you how far it's come with EDF overcoming those problems. Hydro is about 20% up compared to the same period, 2019 to 2023 on average. And solar and wind generation about 12% up compared to last year. And so combined with the sluggish demand that Tom laid out, that's what's creating these periods of negative prices within the market. And we're certainly going to see more of them as we go through the rest of the year. And we'll see more of them in years to come as well, fundamentally because the pace of renewable output is greater than the pace of demand increase within Europe. So this is very much a bearish driver, but still have to remember that whenever you have a thermal plant that's setting the price, which is still the majority of the time in Europe, prices will be higher than they were pre-crisis, simply because gas prices are higher than they were in that period. So, if you look at the forward curve in Germany, it's not anywhere near where it was in 2019 or 2020. And that's really a function of the fuel prices, even if the fundamental situation in terms of the supply and demand balance has changed a lot on power in the past couple of years.
Which is a very good point, and probably a good segue to a question that I have for you, Tom, on the gas side. So prices are lower, yet not at pre-crisis level. The market is balanced. There's, as we said, demand is not picking up, and the supply is relatively comfortable at the moment in terms of levels. But prices are still higher. Is that due to geopolitics? And what do we mean by geopolitics? What are those factors or those events that are keeping the price to a higher level compared to historical levels, in a sense?
Yeah, it's an interesting point. So I think the first thing to note, of course, is that the role of LNG into the European market is that much greater than it was pre-crisis. It's a bigger share of the pie, and therefore the market now is in Europe is having to respond to more of what's happening globally, and therefore there's more of a tug of war going on for LNG cargoes to come to Europe. So that naturally makes the price more expensive, full stop. But you do have this geopolitical element as well. I guess the most pressing for many in Europe is the role of Russian supply to Europe, both in the form of pipeline gas that is delivered through Ukraine, but also the form of LNG as it comes to Europe, into Northwest Europe, into places such as Zeebrugge in Belgium and Montoir in France. So going back to the Ukraine transit situation, there is a very real risk that about 3% of overall European supply could be gone from the beginning of 2025 should Gazprom not be able to deliver to customers through Ukraine. So that's about half of its supply that Gazprom still has in the European market is delivered through Ukraine, the other half through Turkey. But if it loses that Ukraine conduit, then Europe is down about 3% on its overall supply availability. That impacts markets such as Austria and Slovakia in particular. We saw that not that long ago in terms of that risk coming close to realization, in terms of OMV saying that it is concerned that it may cease supply or cease to receive supply through that route. On the LNG side, Russia's role there is actually delivering more LNG into Europe than it has done in the past. But the prospect of geopolitical actions in terms of sanctioning could mean that there is less LNG into Europe if that's the way the European Commission goes. So again, that could be just another chunk of supply removed. And then you can go further and further out, go further away from Europe. You have the role of what's happening in Yemen, the possibility, and we think it's quite a low possibility if there's situations in the Straits of Hormuz, and so on and so forth. So that you have these real global events which could impact trade routes of LNG that could hit Europe.
And I have to ask you, how likely is it that the European Union is going to enforce a new round of sanctions on Russia LNG, especially in an election year?
I think it plays to their advantage. I think there is a lot of resistance, though, actually, from those who buy under long-term contract Russian LNG. So market participants in Spain, in France, they get a reasonable amount of Russian LNG under LTC. So they will be in the back rooms kind of pushing for that not to happen. But clearly from a political perspective, from in an election year, that is a very strong message to show that you are banning it. So you do have politics versus market economics, kind of, again, in a tug of war, I guess, taking place.
It's always an interesting battle to watch and to analyze, obviously, which is, leading me to a similar question on the power side, Matt. I think that geopolitics has a role. indirect role in a sense, and correct me if I'm wrong here. But I think that what's interesting is the new balance between geopolitics playing a role on the gas side and then weather, which is probably becoming more and more of an external factor, which is a major risk or an opportunity, depending on how you look at it. Is that a correct representation, or do you see other risks in the second half of the year?
Yeah, sure. I mean, the risk on the gas side is still a big risk on the power side. So we're still in the position where gas plants are setting the price in Europe roughly 70% of the time. It's a bit different across different countries. So it is still the key driver of power markets of what happens on the power side of what happens on the gas side. So those geopolitical risks do play into it. There are other risks. So the carbon price is definitely one where we've seen such bearish fundamentals in the power market really playing into to the carbon price, and that is, should in theory be going down given those fundamentals. But we've seen a bull run recently, and then as you point out, weather is becoming a more and more important driver. So it's always played a role on affecting the demand side of the power market. But as Europe adds more and more renewable generation, it increasingly plays a role on the supply side as well. So you can see countries like GB and Germany with enormous potential variability based on the weather for solar and wind output. And that then, can have a really bullish or bearish impact on those markets that participants need to be aware of.
So if I join the dots and try to draw a conclusion for our outlook is fundamentally bearish, so that we expect prices to remain relatively subdued or possibly even go lower than current levels, but it's very, very risky and pricey to be bearish in this environment. Is that a fair conclusion, or are we of a different opinion?
I certainly share that view. I think if the situation in terms of Russian supply and LNG availability around the world turns out to be okay, there isn't cut-offs in Russian supply or indeed LNG cargoes coming through straits or from unplanned outages in Malaysia or Australia, then in my mind gas has got a long way, potentially quite a long way to fall. But it's a big if those things don't happen.
But thanks a lot, guys. It's been very interesting and insightful as always. And I invite all the listeners and viewers to go and check the webinar that we ran a few weeks ago, exactly on the balance between bearish fundamentals and the bullish geopolitics for the second half of the year. And as always, just visit our website for further information on energy foresight, icas.com. Till next time.